the business then, Owen Fairclough here. European markets pretty non-committal ahead of that key European Central Bank meeting.
Yeah, as you'd expect, Stuart, pretty flat at the opening bell on the European markets. Expect the numbers to really start moving after 1:45 p.m. That's when we'll have the outcome of the European Central Bank's latest Debt Governing Council meeting and whether Mario Draghi will deliver up the goods to meet market expectations of a big intervention in the Eurozone debt crisis. You can see there, those are the numbers in green. Lots of Spanish bank stocks being traded, I can tell you, as you would expect in advance of that meeting. On the Asian markets, the Nikkei closing just 0.1% up, having traded higher for most of the session. We will get an early test of all this, Stuart, before this ECB meeting, with the Spanish government selling around €5 billion worth of new bonds. 10-year bonds will be on the table there as well, and that is the best indicator right now of what investors think about Spain and what their sentiment is towards this country. Remember, those yields, those interest rates on 10-year bonds have been coming down in the last few days, but that's because of the expectation that Mario Draghi is going to spend some big money to help the Spanish out.
Well, we'll get that decision from the ECB. In fact, around about 1:45 Paris time. Bring it to you, of course, here on France 24. The ECB has promised it'll do whatever it takes to protect the euro, but what does that mean? Josh Vardy looks at the possibilities.
Willing to do anything to save the euro. That's what European Central Bank Chief Mario Draghi said ahead of the European summit on Thursday. A statement questioned by financial experts.
Does doing everything mean he is ready to intervene heavily in sovereign bond markets to calm market fears about a demise of the euro? If he gives a clear signal that the ECB would act, if need be, on sovereign bond markets, then the euro crisis could actually start to fade.
European leaders have several options on the table. The challenge is to stop Eurozone countries like Spain and Italy borrowing at excessively high rates. To do this, the ECB could relaunch its bond buying programme. Another more controversial option, supported by Italian Premier Mario Monti, would be to grant the European Stability Mechanism a banking licence. This would allow Europe's permanent bailout fund to raise more capital than it's currently able to, which the ESM could then use to ease the strain on the Eurozone's weaker economies by buying their bonds and lowering interest rates. However, this route is heavily opposed by Germany and Finland, who say any benefit would only be temporary and that the result would be out of control inflation, along with less desire to tackle the problems at the heart of Europe's most poorly economies.
Just a few earnings for you out this morning. Plenty of them, too many to put up on the board, but I've picked out a few key ones for you. Adidas had a very good Euro 2012 as an official sponsor of that tournament. Its latest earnings up for the second quarter, up 18% to just over 160 million euros. Sony, though, the Japanese company, remember, in a lot of trouble at the moment, having to lay off a lot of people to try and stem its losses, which have widened to 24 billion yen in the second quarter. But Sony says it should make a profit during 2012.
Let's bring you a bit more business news now. The Greek coalition government has agreed on pushing through 11 billion euros in spending cuts. Left-wing ministers have dropped objections to new reductions to pension and civil servant wages over the next 2 years. Auditors from the EU and IMF had threatened to withhold the latest bailout funding from Greece unless the coalition accelerated its austerity programme.
Staying with Greece, Morgan Stanley has been charged with insider trading over a local bank merger. The US investment bank has been indicted over a failed takeover by National Bank of Greece for Alpha Bank last year. It's alleged that Morgan Stanley drove Alpha's shares up by a third while acting as an advisor for National Bank of Greece.
And China's government has bought nearly a fifth of football club Inter Milan, a subsidiary of China's state-run railway, and other investors are to help build a new stadium for the Italian club. Their stake of around 200 million euros will make them the second biggest shareholders, with the Murati family retaining control. Inter Milan say the deal will help bring the club to fans in emerging markets across Asia. That's your business then. Don't forget 1:45 Paris time for that ECB announcement. More business, of course, with Owen. Here on France 24. Stay with us if you possibly can.